So this year, 54 million pounds have been secured in the long-term market. 54 million. What has been burned structurally in the reactor operations globally for, let's see, we're 9 months in. It's 3/4 of 180. What is that? 135, 145. We're 50%, 40% of where we should be in terms of replacement rates. Yet the term price is up 20% this year. So it's extraordinary to me to look at a market with historically low levels of spot traded volume and term market traded volume and see the price firm in spot, rising in term, starting to move in spot. We just saw, I think, 83 traded today, starting to trickle up a little bit here. But all of the evidence is pointing towards a larger move.
And supply risks are rising, and they seem to be rising almost daily. Production shortfalls from major producers like Kazatomprom, that's happening as well. With the growing global demand for uranium that you've already articulated, can you see a time when there's a possible significant price surge, maybe even happening in the next 12 to 24 months due to these supply constraints and production issues?
100%. Yeah. I think that all of the evidence is there in the physical market if you look closely enough. The big thing I've been talking about for the past months and putting a finer point on it here is the term market volumes have been very low this year, especially relative to last year, especially relative to the previous bull market where we had 5 of the 7 years between 2005 and 2012 were greater than replacement rate contracting levels. So at the time, 175 million pounds annualized of demand. And we saw a few years north of 200 million pounds in the market, in the long-term market secured annually. So this year, 54 million pounds have been secured in the long-term market. 54 million. What has been burned structurally in the reactor operations globally for, let's see, we're 9 months in. It's 3/4 of 180. What is that? 135, 145. We're 50%, 40% of where we should be in terms of replacement rates. Yet the term price is up 20% this year. So it's extraordinary to me to look at a market with historically low levels of spot traded volume and term market traded volume and see the price firm in spot, rising in term, starting to move in spot. We just saw, I think, 83 traded today, starting to trickle up a little bit here. But all of the evidence is pointing towards a larger move. What's some more of that evidence? Massive moves in conversion and enrichment. Those always precede big moves in uranium. The whole fuel cycle is connected. When there's security of supply concerns, utilities will prioritize the later half of the fuel cycle. So they'll secure the services of enrichment and the services of conversion prior to buying the uranium that has to move through those services. So last year, 2022, we saw a lot of interest, a lot of volume traded in the contracted conversion and enrichment markets. The prices of these have skyrocketed. They've tripled in the last 2 years. Uranium price is up about 85% over that same time period. So uranium has some catching up to do, and it will. Some other evidence. Term market contracts that are being discussed right now have ceilings for deliveries going late decade, early 2030s, ceilings in the 130 plus range. So this is a seller's market, right? It's a seller's market. What does $130 ceiling mean? It means that the buyer expects prices at the time of delivery could be higher than that, and they want some protection. And the negotiation part of that is that the seller is willing to sign a contract with that level of ceiling if they get a very high floor, which right now floors are in the 80s. So 80s floors, 130 ceiling, it tells you where the price is going. 3-year forward is in the 90s, 5-year forward is over $100 a pound. That tells you exactly where it's headed.
So Justin, there's just so many positive developments and math in the nuclear and uranium sectors, including the supply deficit, yet investor sentiment is not exactly screaming positive here. In your analysis, do you expect investor sentiment to improve significantly in the coming months, or is it still maybe even years away?
No, I think it's already improved significantly over 4 short weeks ago. I was in London at the WNA conference September 4th, 5th, and 6th, and that if you chart it, you'll see September 6th, the last day of the conference, was the low of this summertime pullback. In most cases, usually, a lot of times there was a retest of the August low from the Japanese yen carry trade unwind that was kind of a liquidity event for 3 days that hit uranium as well. So we had kind of this double bottom in the summer, but sentiment was absolutely terrible. And it was pretty wild to be at this conference because the vibration was so high and brilliant conversations, brilliant presentations, so much discussion around the aggressive nature of Chinese buying, a lot of discussion about Kazatomprom in Kazakhstan and what's really going on there, a lot of discussion about AI and tech supporting the big tech companies had reps at this conference. They were kind of sniffing around nuclear.
That's interesting.
So all of this was like so positive happening here. And then I'll take a lunch break and I'll look at Twitter and see, like, good Lord, like people are attacking each other and capitulating publicly. And it's like, so the last day of that conference, I put out a video to our membership. I said, you guys, I mean, it's dangerous to say this, but the market is wrong. The market is wrong here. Take advantage of it. And a lot of them did. So since then, the equities are up. I mean, another good day here, up about 35 to 40% in the last 30 days. And sentiment has improved greatly, and it's largely influenced by these big pieces of news. So very quiet market, July, August, plus the Japanese yen liquidity event, August, final capitulation in September. Like I said, a lot of this was driven by some of these factor baskets held by funds just dumping the shares with no knowledge of the sector whatsoever. So big improvement in sentiment. The sentiment swings very, very wildly in this sector for whatever reason. So yeah, I wouldn't say things are euphoric here, but greatly improved from a short month ago.
So how would you anticipate a potential global recession to impact the performance of uranium equities? And for you, will you be a holder even throughout something like that if it were to unfold?
That's a really good question. Recessions don't really affect nuclear operations very much. They're not very easy facilities to cycle up and down in terms of electricity production. You can do it a little bit, but it's sort of slow. And reactors typically are like the foundational base load of any grid. So recessionary environments usually don't affect, let's say, uranium demand, with an exception of if part of that recession is equities risk off, the financial demand is not going to be there. And maybe even you'll see financial selling. So that could temporarily affect, let's say, spot prices. If we did see hedge funds selling the uranium that they held, that would be some extra supply into the spot market. But if we don't see any changes in the pace of buildouts or the operations, the overall demand for the commodity should remain as projected now. With that said, markets go risk off. The equities, uranium equities are still equities. So even with a firm and or rising price in uranium, even with demand picture as robust as ever, we've seen it time and time again. Markets, broad market goes risk off. Usually uranium equities go risk off too. So would I still hold in that environment? I think it really depends on the nature of the sell-off. I think de-risking during COVID, for example, if you were able to take advantage of that, of the COVID crash in March of 2020, clearly that was a buy everything moment. So generally speaking, we think we have multiple years ahead of us of a bull market for the commodity, and ideally also for the equities. If we have extreme liquidity events, it's probably wise to do what you can to raise cash as a hedge. Shorting is very, very difficult. I've done well with it. I've lost my you know what with it. So at times I will short the broad market. I very rarely, I haven't been a shorter of uranium equities actually ever in this bull market, but I do know people that do some long short funds that have played it very well in that regard.
So there's new photos showing China building America's best nuclear reactor design at record speeds to become #1 in nuclear power. really America should be doing this, but we're not. What does this rapid Chinese nuclear manufacturing movement mean for American nuclear reactor manufacturing?
Well, I think there's evidence that we can do better, right? So for them to build their own, homegrown Hualong ones in 5 years is one thing, but for them to take Westinghouse's design and to build it in 5 or 6 years and do it on budget, that's a big sign that we should be able to do the same. And the big problem with nuclear in the United States, well, I guess there's multiple, but the operational fleet in the United States, almost every single nuclear power station in the US is a different design. And what the Chinese are doing, they're basically building fleet mode with two main designs, or I guess three if you include the AP1000. So one after another, after another, after another of the same designs. And India is doing the same thing. France did the same thing in the 80s. And it's something that we can do here. And that was another significant element to the DOE's presentation this morning, which was, nth of a kind is really where you see the cost savings. And there was an example just from between Vogtle 3 and 4. Like you had 20 to 30% declines in cost and time frames. So all the targets along the way of constructing Vogtle Unit 4 were reached 40% faster than Unit 3. And the costs were significantly lower just between the first and second reactor. So if we can build a dozen of these and we get the supply chains going and the skilled labor is there, we can probably, are we going to be able to build them as fast as the Chinese or even like the Japanese in the early 2000s? The Japanese were building enormous, brilliant marvels of engineering, boiling water reactors in 4 years. Are we going to hit that? No, we're not. We're not going to hit that. And it's always going to be more expensive here with unions and insurance and all of that sort of thing. Litigation protection, things like that in the United States, it just aren't as much of a thing there. But we could do better than Vogtle, that's for sure.
So Mike Goff, Assistant Secretary at the DOE, he says that the U.S. needs 200 gigawatts of new nuclear power and that retired and existing coal plants can handle capacity of almost 175 gigawatts right now. How do you see them using existing and retired coal plants?
These largely are going to be replaced with SMRs. Due to the fact that most of these retired coal plants are smaller and the existing grid and the surrounding demand is likely mostly insufficient to accommodate a 1,000-megawatt reactor. So most likely these are going to be SMRs. What that means basically is it's probably going to be slower to get that going. Even though these large reactors hypothetically take longer to build, we still at this stage, we literally have one SMR that's been approved in the United States, and that's NuScale's 50-megawatt reactor, and there's 0 orders for that reactor. So we're looking at probably the larger SMRs that would be more viable for these, like the 300-megawatt range. That would be perhaps TerraPower's Natrium reactor. The first one of those is being constructed to replace the coal plant in Wyoming. The actual first of a kind is fitting this particular picture. Or maybe GE Hitachi's BWRX 300. This is going through the licensing process right now in Canada, probably soon to follow in the United States. It is a boiling water reactor. It's more familiar, so hopefully it won't take 5 years to go through the NRC. But these things take time for these new designs to be approved, and that's where we're at. So the first coal replacement with TerraPower, we're looking at 2030. And that's already broken ground. So, the boiling water reactor, like the BWRX, doesn't need HALEU as fuel. The Natrium reactor does. So that's part of the reason why it's going to take a little bit longer. Once these things get going, the utilities, by the way, don't like first of a kind. So this is why they're probably going to lean towards the AP1000s. But to the effect that a utility wants to build SMRs, they just don't want to build the first one. When we have the first BWRXs built in Ontario that are currently being constructed, then we're going to start to see it snowball. But in my estimation, that's a 2030 story.
So it's been reported, Justin, that we need to meet demand. We need 2 brand new Kazatomprom in terms of production. Given the projected demand that you're aware of for uranium from the nuclear power sector, how likely is it that the global uranium supply will actually need that? 2 more Kazatomprom in terms of production scope to feed the demand? And how likely is it that they could even be able to accomplish that?
It's going to be a very, very big challenge. The good thing is that high enough prices for long enough will eventually see supply respond. I mean, if we have sustained prices, let's say above $150 or even pushing 200, and it stays there for multiple years, there's going to be an all-out gold rush towards uranium production. Even though it's going to take time for these projects, that means we'll probably see, potentially large multinational mining companies take out the likes of NextGen. That's entirely possible. In order for, like, the Rook 1 project, 30 million pounds, almost 30 million pounds of uranium for the first 5 years. That's a huge project. The Namibian projects that are also very large but lower grades, open pit mines. They've got some water challenges in Namibia, but these things all take time. That high enough prices for long enough will sort out. But the most important point of that is the long enough part. A spike to 200 to crash back down to $90 doesn't solve the supply problem. So if the prices are high enough, then we're going to see Bannerman and Deep Yellow and Forsyth and Denison and NextGen all signing contracts at those prices. And that is what is going to secure the supply to come online. A price spike that crashes doesn't help these projects come online that don't have contracts secured, because they're not going to want to take the capital risk to develop the projects into a market that might not be supportive once they're up and running. That's not necessarily the case for NextGen or Denison with very, very low cash costs. But the lower grade stuff in Namibia, these big projects, they need sustained higher prices and contracts to de-risk. And eventually, we'll probably see some innovations that are early right now, and aren't going to disrupt this thesis whatsoever. But let's say mid-2030s, $200 north per pound of uranium, maybe we'll see some innovations in seawater extraction. Maybe we'll see some innovations in phosphates. In Morocco, they've got, 90% of the world's phosphates, and there's an enormous amount of uranium held in these phosphates in Morocco. Haven't extracted a pound so far, but it's there. At a high enough price for long enough, it'll come out. It's just not going to happen in the next 5 years.
So Russia appears to be progressing towards the banning of exports of certain critical materials, and they've been stating or it's been speculated that it's going to include uranium to unfriendly countries, which is essentially the G7 countries. It could be an incredible disruption to the nuclear fuels market, or maybe it won't be. What is the extent of the disruption that you would expect if Russia does indeed follow through with this, and what happens to uranium prices?
That really depends on who ends up on the unfriendly country list. So it's difficult to specifically answer that question. I think it's a foregone conclusion that the United States and the UK would be on that list. So the United States has done a lot, both the utilities individually and collectively, and the United States government, to make attempts to get off of reliance on Russia. So the utilities have pulled forward a bunch of material. They have voluntarily contracted ex-Russia. They're seeking waivers and receiving them to some extent from the DOE with the ban that we've already enacted that actually goes in place in 2028. So the waivers between now and then may or may not be allocated. So far, we've seen a couple sets of waivers be issued. As time goes on, that's going to diminish. It would be problematic for a couple of U.S. utilities that are highly reliant on future deliveries of Russian material, that have been doing everything they can to get waivers. So it'd be disruptive there. It would be mildly disruptive to the UK. If France is on that list, so if they just say we're not sending material to any NATO country, that's an incredible disruption. France has a very, very high reliance on Russian material, and it was actually kind of funny. There was an article that came out from the Russian press last week about this story, basically saying that Putin made this announcement. Why are we sending this material to countries that are bombing us? And then shortly thereafter, his admin started to do market research to find out how would this be disruptive? Do we have other markets to sell this material into? And they do. they can sell it to China, they can sell it to India, they can sell it to Turkey, they can sell it to Brazil. The list goes on, right? So there's plenty of market to sell this material to if they cut the West off. But in this article, it stated that France has claimed that they are making efforts to wean themselves off of our supply, but they are lying. That was the translation coming from Google Chrome. So I had a little chuckle there, but it would be incredibly disruptive. And this is not something we're necessarily betting on or hoping for. We don't need this to happen at all. But I can tell you for sure the utilities are concerned, and the nuclear fuel consultants, UxC, Trade Tech primarily, have been warning of this potentiality for the past 2 years. So as legislation has moved through the United States and finally come to pass that this ban is intact and law now, but as that process was happening, UxC would continue to say, yes, we're doing what we can to move off of the material, and this ban is looking like it may or may not happen. But there's always a chance Russia just says, you can't fire me, I quit. And they've been saying this for 2 years. So it's not us, it's not the investing side like hoping for panic. It's actually the nuclear fuel consultants whose customer base is utilities telling them this can happen, guys. So there's a decent chance it happens. There really is.
So, Justin, is there a demographic shift in sentiment towards nuclear power happening right now for those under the age of 40? In other words, are younger generations becoming more supportive of nuclear power? And if so, is there any significance to that?
It certainly seems like it. I think that there's some significance there. The younger generation, the youngest generation right now that are currently like young adults, don't really have the Fukushima accident like ripe in their memory as much as the generation before them. So for them, especially some of the for younger folks who are, let's say, more tech savvy and are more conscious of tech in general, they might actually start viewing this as sort of like this modern technological solution. Also, young people generally kind of lean left politically, and the left, historically speaking, has been anti-nuclear, and that has been shifting. So to the extent that, let's just say kind of like the liberal side of the political spectrum has been increasingly embracing nuclear, that also tends to represent the younger generation. But increasingly, we're seeing young people on social media post positive support of nuclear energy. The other big piece of it is that the younger generation also tends to be much more concerned about climate change and carbon emissions, more so than the older generation. And so to that extent, nuclear is a very obvious, maybe the most obvious solution to that perceived problem. And so that leads to some more acceptance amongst the youth for sure.
This has been a wonderful conversation. Before we wrap up here, and I ask Justin our final question, I want to point everyone over to our Substack. It is free. Go to metalsandminers.substack.com. We post free content on the consumer economy, markets, artificial intelligence, individual metals and miners, and all the expert interviews that we conduct, just like this one. They are all up there. And when you subscribe, we want to give you a free gift. It's a report that we wrote. It's based on the important Ray Dalio foundational premise titled, "If You Don't Own Gold, You Know Neither History Nor Economics." This free gift is a must-read for everyone on why we all should own gold. So head over to metalsandminers.substack.com, put in your email address to subscribe, and receive the free gift on us. Also, I'm positive that you've enjoyed the conversation with Justin as much as I have. Please let him know. Hit the like and subscribe button and leave a comment below the video. It's now time for our Golden Nugget segment. Justin, let's discuss internal management share purchasing, something that would be a very bullish indicator would be internal buying by management teams. Are there signs of increased insider buying among uranium company executives going on?
Depends on the company. I've seen signs of buying. I've seen signs of selling. I agree with you. Insider ownership is a very important metric to acknowledge. With all of that said, nothing affects this sector more than flows. So there are companies with insane amounts of outstanding shares, very, very low insider ownership that have significantly performed during this market, largely due to literally the size of the ETF holdings of their particular stock. So passive flows move things more than anything in this sector. So recognizing ETF ownership and share structure is equally as important, if not probably more important than insider ownership. But with that said, high levels of insider ownership, and of course, the timing of insider buying usually is a decent tell of confidence in a company's projects and confidence going forward in the market,
Justin,
or lack thereof.
Yeah. Well, thank you so much for coming on to Metals and Miners and for being so generous with your time, your analysis, and ideas. It's been fantastic to spend the time with you. Would you please share with the viewers any important message that you want to leave with those tuning in, where they can learn more about your work and how they can connect with you?
Sure. Yeah. So Uranium Insider is a team effort. I've been operating this for the last 5 years, built up a significant team, a significant contact network within the industry that allows us to provide content to our membership that is very, very unique. As far as I understand, we're the only uranium-focused investing newsletter that exists. There's other investing newsletters that touch on multiple commodities, but this really is our specialization, and it's something that we have focused 20,000 plus hours on in the sector. It's a very, very unique opportunity here. Like I said, we're not at the top of the first inning, but I would argue that the risk reward is skewed more than it was back then as a contrarian bet, simply due to the de-risking of the developments that we've seen over the past few years and over the past few weeks. We produce a monthly newsletter that's about 30 to 40 pages. We provide a monthly 2-hour-long webinar. My business partner and myself, usually we are joined by a special guest that's either a company representative, a representative from one of the specialist funds, or somebody that works in the industry. It's a very deep dive. We communicate on a daily basis, sector moving news, and I provide a couple of videos a week on the sector as well. So thus far, we've outperformed the ETFs since inception in 2019 by 50%. So we're very proud of that track record and very, very constructive going forward.
So I've been following you for multiple years, and I really appreciate all your work and all of the data and information and perspectives that you bring. And so, folks, if you're interested or already are in the uranium trade, Justin is a very critical follow to have. Justin, I look forward to having you back on sometime soon. Thank you for being here with us, and everybody else, thank you for watching. I want to point everyone over to our Substack. It is free. Go to metalsandminers.substack.com. We post free content on the consumer economy, markets, artificial intelligence, individual metals and miners, and all the expert interviews that we conduct, just like this one. They are all up there. And when you subscribe, we want to give you a free gift. It's a report that we wrote. It's based on the important Ray Dalio foundational premise titled, "If You Don't Own Gold, You Know Neither History Nor Economics." This free gift is a must-read for everyone on why we all should own gold. So head over to metalsandminers.substack.com, put in your email address to subscribe, and receive the free gift on us.